Good morning. It is Monday, December the 18th, 2023. We hope you had a nice weekend. Some exciting news coming out of Oceanside camp here. Happy to announce Patrick and Victoria welcomed their son into the world last week. Gabriel Patrick Gall. I like that. I like that name. Gabriel Patrick. Strong biblical name. I like it. Patrick wanted me to let everyone know mom and baby are doing well. Big baby, 8 pounds 15 ounces. So certainly a great, wonderful blessing and a nice Christmas present for the Gall family here in 2023. Speaking of presents, I guess you could say the market the last week gave most people a nice little a nice present. Another strong week. Okay, this one mostly coming off some of the Fed's commentary. Okay, so widely expected. They did not hike rates. Okay, so that obviously wasn't the driver of market returns last week. But what it was like they had this thing called it's called a dot plot. And basically what that is, it's the expectation of the Fed, the committee, where they think interest rates will be next year, okay? And so for the first time, what we saw on their release, their little dot plot, predicting 3 rate cuts in 2024, okay? And really 75 basis points, right? And in practice, it typically it doesn't happen, down 25, down 25, down 25. Usually it's like, oh, the employment picture is slowing, we better cut 50. And that's the way it usually plays out. But nonetheless, definitely very a dovish release, okay? So very accommodative. So you saw interest rates come down a lot, right? So the 10-year U.S. Treasury below 4%. For the first time in a while. Obviously that is good news for those looking for lending, improvement in mortgage rates, auto loans, things like that. So very, very dovish. All right, equity markets, again, not surprisingly, also would rally on that news. You actually saw the Dow Jones Industrial Average hit a new high. All right, side note, kind of an educational note, the Dow Jones is a very, very poor index to track in terms of how markets are doing. Reason being, it's 30 companies. All right, it's just 30 companies. And the Dow, the index, they'll, when companies aren't doing well, they'll take them out of the index. They'll add companies that are doing well. It's 30 companies, right? So when you have over 3,000 companies that trade in the U.S. And then tens of thousands globally, kind of a hand-picked 30 companies isn't a great benchmark. I digress. Nonetheless, it's very strong. So you saw equity markets up across the board. Small caps, which have lagged in 2023, are now up over 20% since the October lows. Okay, so just all around a really nice, strong close to the year. And as we discussed in last week's video, this is really just the domino effect of inflation subsiding, at least for now. We've all got our fingers crossed on that. So this week we get the PCE data, right? So that's the Fed's preferred metric for inflation data. So again, one number, but we'll see. All signs point that inflation continues to moderate in terms of rate of change going down. So with that being said, we hope you have a wonderful week. Next week, I'll probably take 1 week. We probably won't do this Monday video next week, given it's going to be Christmas, but we'll definitely be back with the video shortly into the new year. So wishing everyone a Merry Christmas and happy holiday season, and looking forward to 2024. We're so grateful for the opportunity to work with many of you, and we're wishing you and your families just a great couple weeks here, and look forward to seeing you again in 2024. So have a great week. Bye-bye.